Secret document leaked. Tesla is planning big things with NIO. Tesla, being the rival of China's EV company, well, who doesn't like a battle when there are two superpowers involved, right? Well, let us not go all into politics and come back to our topic. We have got a secret document with us which says that Tesla is planning big things with NIO to pump for 1,000% NIO stock. So hey viewers, welcome back to Stock Market News. Today, we are back with an amazing secret that will definitely fill you with wonder. Today, we're going to talk about why you should invest in NIO right now and why it will surpass Tesla. So watch the video completely because it's going to be lit. Well, if you want daily stock market doses, whatever's going on in the stock market and all the stock market controversies, you've come to the right place. So let's get into the video without any further ado. But before that, make sure you hit that bell icon and subscribe to our channel to get every single update about this channel. See, the most recent outbreak of the coronavirus in China is having a crippling effect on the country's automobile production and sales, creating even more problems for industry giants like NIO. According to the China Passenger Car Association, the most recent outbreak of the fatal disease will continue into the month of May, resulting in a production loss that is at least 240% higher than normal. That is huge! Because of bottlenecks in the supply chain, the regions where the virus has made a comeback are being quarantined. According to the CPCS, the first 2 weeks of April saw a decrease in vehicle sales of more than 40%. Short-term shopping, as in NIO, should not deter investors from investing now. Let's take a closer look at why NIO stock's still a good buy. It's back where it belongs. NIO ended last year with a bang, doubling its total revenue year over year by 122% to $5.67 billion in the fourth quarter alone. However, due to the Chinese New Year, NIO and its peers saw a slowdown in deliveries during the first couple of months of this year, but the EV giant bounced back in March, delivering a record 9,985 vehicles during the month, the vast majority overall, and NIO delivered approximately 25,768 vehicles in the first quarter, which was an increase of 28.5%. Results for the first quarter and the year-over-year comparison were above the high end of the delivery guidance range. Amazingly, as the end of March, the total number of deliveries reached 192,838. Taking into consideration how much the number has increased over the course of the past few years, the recap of the collective results for the fourth quarter is as follows. Another successful quarter for NIO came to a close, with the automaker reporting an increase in sales of 49.3%. During the period under review, the company handed over the keys to 25,034 automobiles, representing a year-over-year increase of 44.3% over the corresponding time period in the prior year. In addition, despite the fact that extensive research and development was conducted, the company was still able to achieve a healthy vehicle margin of 29%. NIO is aiming for a brisk market for electric vehicles. While dealing with supply issues, the Chinese EV upstart is bringing a possible Model Y rival to the market. Is NIO stock a good investment right now? NIO is releasing its new product on June 15th. The ES7, a 5-seater electric SUV based on an improved, highly automated driving architecture, is most likely. NIO hopes to begin delivery in late August, following a delay caused by China's COVID lockdowns. Some market observers predict that the ES7 will compete in China against Tesla's Model Y and BMW's X5L SUV. On June 9th, NIO reported net losses for the first quarter that were significantly lower than expected. Revenue increased by 24%, just outperforming EV deliveries, which increased by 28.5%. However, weak EV delivery guidance for the current quarter prompted a flurry of price target reductions for NIO shares. However, the EV manufacturer reported an increase in production and deliveries from the beginning of June. Management allegedly discussed plans for a mass-market EV in the second half of 2024 during a NIO earnings call. The long-rumored, low-cost NIO sub-brand might broaden the company's potential market, spurring growth. The Chinese electric vehicle manufacturer also stated that it will begin producing its battery packs in 2024. On June 1st, the growing Tesla competitor announced 7,024 EV deliveries in May, up 38% over April. NIO sales had dropped by 49% in April due to tight lockdowns that disrupted the EV supply chain. Several municipal governments, though, are proposing subsidies to boost EV and general car sales. This covers Shanghai, the most important Chinese market for NIO and Tesla. NIO and XPeng have been placed on a list of foreign companies that are in danger of being delisted by the Securities and Exchange Commission in the event that their records are not open for U.S. scrutiny in the month of May. The shares of Li Auto Company had already been included on the list. Since NIO operates in the EV market, which is experiencing rapid expansion, the company reaps significant benefits from growth tailwinds in the market. In addition, NIO possesses an alluring product portfolio, which includes well-received models such as the ES6 and ES8 SUVs, amongst others. NIO's battery swapping technology is what sets the company apart from the vast majority of other electric vehicle manufacturers. With this technology, customers can get a fully charged battery in a matter of minutes by visiting one of NIO's battery swapping stations. Because replacing a battery takes roughly the same amount of time as refueling an internal combustion engine-powered vehicle, this significantly reduces the amount of downtime that's required when taking longer trips in an electric vehicle, as charging the majority of EVs requires significantly more time than just a couple minutes. Although NIO is currently expanding its battery swapping station network throughout China, the company does not yet have a significant presence in any markets outside of its domestic market. Nonetheless, NIO intends to roll out that service in international markets over time, and once there's a large enough footprint for them to make a difference, this should make a unique selling point for NIO that will help differentiate its offerings from those of most peers. This could result in additional market share gains, which is why I wouldn't be surprised to see NIO grow at a rapid pace in the coming years. Since the analyst community is currently projecting a revenue increase of 130% for this year, it's anticipated that NIO will deliver revenue growth of more than 100% in 2021 due to strong growth in delivery, as the analyst community is currently projecting a revenue increase of 130% for this year. After experiencing a revenue growth of 480% in the first quarter, NIO forecasts that the second quarter will see an increase in deliveries of 110%. Therefore, NIO is growing at a faster rate than the EV market as a whole, as well as faster than peers such as Tesla, which is expected to grow by 50 to 60% this year, according to the community of analysts, which is about half the rate that NIO is expected to grow this year. NIO is expected to grow at a rate that's approximately double the rate that Tesla is expected to grow this year. Maintaining 100% plus growth indefinitely is, of course, impossible, and NIO's growth will slow in the coming years. However, because its products are well liked in its home market, and the company is also ambitiously planning a major entry into the large European EV market, NIO should still deliver very significant growth in the coming years. However, obvious growth tailwinds for a company, or even an industry, do not always translate into massive share price gains. Investors should keep in mind that NIO, like all automakers, will be operating in a cyclical, capital-intensive industry with low average margins. This isn't to say that NIO doesn't have long-term potential, but investors should keep in mind that a home run isn't guaranteed when investing in NIO or other EV stocks, even though EV sales are rapidly increasing. So, I think we're at the end of the video, and I hope you enjoyed the video, and if you did, then please give it a thumbs up and smash that subscribe button and press the bell icon too, so you'll never miss any updates. And if you have any questions or comments on your mind, let us know down below, and also make sure you check out our channel where you'll find more really cool stuff.